Extension on the U.S. debt ceiling till April or May, the Dow and S&P 500 are up more than 5% from January. Will the outperformance continue?
Well, first to the debt ceiling. The debt ceiling has been suspended until May 19th, so essentially at the moment, for all intents and purposes, the United States of America does not have a debt ceiling. I'm not sure whether this has a big impact on the markets because, as we have seen, politicians always find ways to kick the can down the road. So the markets are not terribly preoccupied with the debt ceiling right now. What drives markets right now, and that's the major driver, are central banks. It's quantitative easing by the Fed, by the ECB now, which is coming, Japan. So that's what's driving equity prices. And central banks have essentially put a floor under equities, which we think will lead to higher prices a little bit in the next few months.
What are your expectations from the India budget on growth deficit and inflation?
Well, I think there are concerns by some analysts that the Congress party will come up with a very populist budget like they did in 2009 before the election, and that maybe they throw economic rationality overboard because of election politics. We are not as pessimistic. We don't think there will be any negative surprises because it appears that apart from certain subsidies, they will probably not block an increase in the price of diesel, railway fares, or natural gas prices. So we don't think the fears of a populist budget, overly populist budgets, are well founded.
What is your outlook on crude oil given the supply concerns highlighted by OPEC?
Well, crude is driven by several factors. One, of course, has to do with demand and supply. With China starting to recover again this year, we'll probably see an increase in demand for oil. Supply disruptions, we don't see that many actually. Okay, there has been a bit of supply disruption from the North Sea. The political side in the Middle East remains relatively murky, but it's probably not going to be a big factor either. Again, one of the biggest factors will be central bank QE. You have a drive into riskier assets, into real assets, some tangible assets, and I think that's the reason why crude has been rallying over the past few months. And it could be a pullback like we could see in the equity market, but probably the flight into real assets will continue to support crude.